Chapter 8. Authorizing and making payments. Cheques. About cheques. The use of cheques is becoming very rare, due to the increased use of debit and credit card and internet payments. And most companies do not accept cheques as payment anymore, because of the increase in fraud occurring in connection with cheques. In this presentation, is information that is in your interactive text study guide, that pertains to cheques. Cheque requisition forms. Payments by cheque. Advantages and disadvantages of paying by cheque. Lost cheques. Stopping cheques. A cheque requisition form is a form requesting that a cheque be drawn. It helps to ensure authorization and the recording of payment. It is an internal document for use within the business, so there is no standard design. It is used when an invoice will not be received or an invoice will follow later but the payment is needed now. For an example of a cheque requisition form, see page 171 of your interactive text study guide. When preparing a cheque requisition form, this is the procedure that is followed. Firstly, it needs to be signed by an authorized person. The general ledger code needs to be put on the form, so that the payment can be recorded. All supporting documents, the documents, stating the reason for the cheque, should be attached to the form. Then when the cheque is prepared and signed, it will be sent to the person authorizing the payment. The invoice or receipt for the payment may then follow. Please note that cheques are no longer used as a means of payment. If a cheque is used for payment, see page 174 and 175 of your interactive text study guide for the procedure for preparing cheques. A bank mandate form is a list of names and sample signatures of people that are allowed to sign on a cheque on behalf of a company. This list is supplied to the bank by the company. The advantages of using cheques. They used to be convenient. Checkbooks have a counterfoil, which is useful in tracing past payments for queries, and they used to be commonly used and widely accepted. The disadvantages of using cheques. They have security problems because they are prone to forgery, and it is a slow method of payment. Cheques can get lost in the post, and it may not be apparent, until the supplier phones or writes to you wanting payment. When the supplier asks for payment, you should first check the supplier account in your purchase ledger or payables ledger, to see if you have sent a payment to the supplier. If you sent a cheque as payment to the supplier, and the cheque you sent is not recent, then the cheque may be lost in the post or misdirected. Once it seems that a cheque may be lost, these are the actions you should take. First, confirm with the bank that the cheque has not gone through your bank account. Then check the details of the supplier, the name and the address, and the name of the person that the letter was addressed to. One of three things may have happened. 1. The cheque has gone through your bank account and the supplier has been paid. If so, then there is an error in the supplier record, and you should give him the details of the payment, the date of the cheque number, your bank account number, and your bank branch code. 2. The cheque was sent to the supplier, but the wrong person within the supplier's company received it. If so, then inform the relevant member of staff within the supplier's company and they should retrieve it. 3. The cheque was sent to the wrong address or got lost in the post. If so, then you need to stop the old cheque, and prepare a new one. When you need to stop a cheque, first phone the bank and request that the cheque be stopped. Then confirm the request in writing via a letter or an email. For an example of a letter that would be written to the bank, requesting the stopping of a cheque, see page 178 of your interactive text study guide. This is the procedure to follow when preparing a new cheque as a replacement for a stopped cheque. Step 1. The new cheque needs to be authorized by an authorized person. That person may be the same person that signed the form instructing the bank to stop the previous cheque. Step 2. The supplier invoice that was paid with the stopped cheque and is marked paid, needs to be altered to show that the cheque that was used to pay the invoice was stopped, and the date and cheque number of the new cheque should be added to the supplier's invoice. Step 3. The counterfoil of the stopped cheque should be marked stopped with the date that the cheque was stopped. Step 4. The counterfoil of the new check should refer to the supplier invoice and needs to state that it is a replacement check. Step 5. The replacement check then should be sent to the supplier with supporting documents, a cover letter or a remittance advice. This is the end of the video lecture called, Chapter 8, on Cheques.